market today is the 23rd of September, and this is the ES Morning Call. Very volatile day yesterday. Rebounded at the end of the day, but more importantly, when I talked yesterday, and I'll show you again in a minute, my little spaghetti chart. That's basically a 2-year day chart. And we talked about where we were and what levels. And if you don't believe me, go back yesterday and check the video. And I said I think the market needs to test the 1909 area. Overnight, we made the low of 1910. I was actually looking for that yesterday. But you know, as usual, the market doesn't always trade the way we want it to. It may get to the points that we want it to, but it you know, gives you a fake out before it'll get there, which is kind of, you know, I know for the newer traders, and if you're not taking an overnight position and trading after Globex, which it's hard to, you know, sometimes catch all those moves. You can't sit in front of the screen 24 hours a day. So we did go down and we tested that 1910 overnight. I'm going to show you what I think based on this 2-year chart. I think that this market is going to go down and test the lows that we made at 1831 back a couple weeks ago when we had that lock limit session. I think it's set up to do that, and from a technical point of view, that any bad news and I wouldn't think that that's going to be a bad thing. I think that it needs to test that area and have some more consolidation, and you know, to set up some sort of foundation to you know, a bigger move to the upside if that's in the cards. So, and we certainly know that it's not going to not happen because of what the Fed's doing, because the Fed is doing everything it can to make sure that it doesn't spook the economy, right? So we may just be a victim of our own of what's going on globally as far as you know, global recession. Let's say slowdown, not recession. All right, so I'm going to start sharing the screen once again. Let's take a look at this day chart here. So this is a 2-year chart, okay? And as I said yesterday, I was talking about how the close from the previous day was the first time that we made a lower low. So right there, okay? So we made a lower low. We were making higher lows, all right? And it was the first time, like in, what is that, 1, 2, 3, 4, 5, 6, 7, about 12 days, we made that lower low, and I was like, I didn't trust it, right? I didn't trust it, and so we make this lower low, and lo and behold, the market washes out. The way I've got this set up right now is that, and so I can shrink it up so you can see it. All right, let me go over here. And so I took the high of 2134 and I took this significant low of October last year of 1813. I drew a Fibonacci number, and through the Fibonacci number, you can see that this is the 50%, right? So we've been trying to get back above that 50% and we failed. And by the way, look at the higher, right? So now we've been making lower highs, okay? And that lower low was a breakout to the downside. So I think the market is going to go back and test that 1830 area and possibly this 1813 area. So that's what I think. It has to get above this 50% for me, for the market to, you know, to be in a bullish state. Now that doesn't mean that it's going to go straight down there, and that's the problem, right? You know, you have all this volatility, so you got to be sort of careful. There's a 2-year look of where the market's been trading. Okay, so technically, I think the market looks like it's gonna go down and test these lows again. So, but there's gonna be a lot of volatility between now and then, right? So, in fact, when you take a look at this, all right, we had a gap up to here to 4170, 42 area. We didn't really fill it yet, but then we have another gap back up here at 1972.36 down to 1973. So there's gaps up above, which we know the market likes to fill those gaps, all right? So today we're looking at a value area high of 1931. We're looking at a bull bear zone here of 1924, point of control of 1933, value area low of 1920 half. We're trading up above value. Okay. Right now, currently, when you take a look at the overnight market, big range, right? And we were talking about this yesterday. Hold on. There we are. Come on. Well, let me make it small so you can see the range first. So we put the crossbars up here. We got a high of 1941 half. And we got a low post-close 1910 half, which we talked about yesterday, right? So if I go back in here, how yesterday we were talking that the market was poised to get back down in here because we had these naked VPOC. Now we got some more naked VPOCs down here at the 1912.75. Okay, as I looked at this yesterday, there's the 1919. We thought that we would make a third rotation yesterday from the high that would have brought us down to 1909 area, right? And lo and behold, they did it post close. So we got an average rotation now, Anthony. What, nine points?
It's, yep, 9 points.
9 points. Okay. So I know it's hard to believe that we are in a 5-minute range. The average move is 900 points, but look at this. Look at the the high from the low, right? We got a 3,100 point move from the high to the low. So you gotta and somebody asked me yesterday, what you do with your stops in markets like this. Well, you got to expand your stops and trade smaller. Otherwise, you're not gonna have a chance of surviving, because you could have a 900 point rally against you. You could be right, and depending on where you entered, and you would be struggling to make money because you would be looking at the big rallies. So based on where we're trading now, we're back sort of like in the middle of the range, right? We're back in 1929 area. When I look at the top, that's unfinished. Okay. And when we look at the bottom, that's unfinished. So I think that the market is, when you look at the distribution from overnight, we're right in the middle. And so, that's indicative to me that we are going to have a two-sided trade, right? I've got the Dow and the Russell in a sell, and the NASDAQ is actually going to a sell as we're speaking. So the 5-minute pivots are now starting to change to on the negative side. Okay. So let's look at our 5-minute pivot has already been taken out. So here's the 5-minute pivot up above. All right. And remember, these are proprietary pivots, 1941 half. We have to take that out for the market to be able to switch the pivot to a buy. So now we're trading back inside value. Based on the overnight move, we're reaching our exhaustion areas, but once the market opens up, we'll be in heavier volume and so on. So the key is that we'll be back inside value, right? And I'd be looking, if we can't get back up above value, this 1931 to sustain this, then I'd be looking for the market to go down and test the bull bear zone and the point of control, and ultimately the bottom of value, right? So there's no rocket science to this, except that the markets like to go back and test these areas, and that's why we chart them, right? We chart them because they are magnets for us to go there, right? So I'm looking for a two-sided trade. I'm looking for failure. Someone asked me yesterday, what I do for failure, right? So when I take a look at, I kind of look at our indicators, right? I do look at our indicators, and I say, what's the overall breadth of the market right now? So right now, for me, it's been moving up and down, right? So you know, so I'm gonna see on the opening which way we move, right? And then I'm gonna be looking to see if we move a 900 points. So I'm actually taking both sides now because we're trading in the middle, and trying to calculate if you know, how many rotations we're having from the high. So I can go from 1941.5, right? So because we went up and made the highs, and we are now moving back down. I want to see if those rotations, okay, will, you know, as you can see right now, you know, it's trying to make a move. You know, this is down here, so 1924. So, you know, I watch in the first 5 minutes to see what kind of range we have, and then I try to calculate from there where we are in rotations from the high or the low, right? And then I start looking at the, you know, the other factors, you know, what the Dow, the Nasdaq, the Russell are doing. So right now they, you know, they're moving from the high to the middle, and if that, you know, are we going to be able to sustain that rally or that break from the highs? So that's how I try to find failure. You got to be sort of unemotional on it, on this, and then when the market is trading like it is with big 4,000 point ranges, you don't have to be, you don't really have to be in a hurry to put a trade on. You could be, you know, more patient. Wait for the trade to come to you, right? Wait for the trade to come to you. As far as the other markets, I'm looking at bonds here. So, you know, I put this out right in the middle of value. You know, I, I think bonds are, you know, are going back up to the 160 area. And if the Fed, you know, shows any sign that they're going to wait till next year for rates, I think the bonds will be up there again, you know, 160 by the end of the year. So we're trading right in the middle of value. This is a, let me change that to 15-minute chart. So, sorry. Kind of changes up when you make a 50-minute chart. But so we've got the top of value at 156.06, bull bear zone, which we are above at 155.22, point of control at 155.20, and 154.31 will be the bottom of value. So I think the bonds are, and I still think that the Fed's not going to do anything till next year. So that's just my opinion. Okay, oil. Nice rally today in oil. Once again, you know how I feel about oil. I think oil is going down to the $20 area, and the longer it stays under $50, I think it's going to end up, you know, gravitating back towards, you know, the lower end of the year. Value area high is 45.74. Point of control is 45.5. Bull bear zone is 45.47, and the bottom value is 45.36. Gold, I did the numbers, but I haven't put it on the chart yet. We have value area high of gold is 1127.60. Point of control is 1126.10. We got 1123.80 is the low, and I'll put the bull bear zone at 1123.70. And as you can see, we're about $7 above above that. Gold right now is trading right here, and you know, gold is definitely in a downtrend. These numbers are not. I'll put the bull bear zone in for you right when we talk here. Data. Let me put that in there. So we got the bull bear zone at 1123.70. Which is down here, and we're trading above it right now. So it's also trading above value. I'll get those out. I'll tweet it out when I get all the numbers in on gold. So once again, here we are. We got back inside value, pushed down to yesterday's middle of 1928. The low of it was 1928 and kind of stopped right there. So this is going to be the key. Can we get back above value and hold that, and then look to see if it will go up and test the top part of the range? So, you know, that's what you need to do if you're going to be trading this. Be patient and, you know, wait to see market failures and movements towards either end of the Globex, high or low. Any questions, Anthony?
Nothing yet.
All right. If you got questions, type them into the prompter, and we'll be able to try to address them with you. Still getting more familiar all this stuff on Ninja right now, and we're Pat and the group are actually getting more of the indicators loaded up on the new NinjaTrader charts, and as we get them, we're going to put them out there. So if you look at a 20-day, if we look at a 20-day mode, I got it up here at 1943.25. The bottom of 1920.75 is the bottom of value, and then the top of value would be at 1965.5. Now these numbers are a little skewed because we have to switch this chart to tick to get the actual 20. But and then if I use the day only, okay, day only, we're at 1931.5, 1960.38, and 1973.13. So we talked about this yesterday, how I thought that the market could head back down in this area, right? 1890. I just think that it's going to test that low that we made. So that's about it. Whoops. I did something wrong there, right? Let me fix that. Any other, if there's no questions,
Nothing. Just they want to maybe one day have you from this into the open. They want to watch you trade the open.
Okay.
Set that up, maybe.
Yeah, we can do that. Remember, I don't know how much delay does it look like we're at right now?
There's a little delay. That's the problem.
Okay. So yeah, that you know, well, let's set that up for maybe one day next week. We can go into the open and you know, and we can ascertain the market together. I think I lost that profile. I'm gonna have to rebuild it. I closed it down by mistake, but we'll find it anyway. So if there's no questions, all right, stay with us on Twitter. Right now, like I said, we have the 5-minute pivot up above, okay? And here's all the sisters taking out the 5-minute pivot there. Here's the 5-minute pivot there. Okay, so let me put those out for you. So 16,313 is the 5-minute pivot in the Dow. And the Russell, 1145.10. And in the NASDAQ, okay, we just took it out.
Questions just came in.
Okay. And it's gone up to 4,300. 4,300 point half. What's up?
All right. Do you have a method or clue to know what kind of day it's going to be? I mean, trading, range, etc.
No. I mean, yesterday we put out, you know, there's no true method. You have to look at, you know, are we moving from a high to a low? Where are we in the relationship? So, you know, the way we look at this, and when you get our trading manual, when we make that available, you'll see all our methodology, right? I'm going to put it out for us to look at, right? So that you know, everybody can see that we don't think that there's a specific method, right? So what have I been showing you? All right, I start with this day chart. Almost every day, I've been showing you the 2-year chart. Okay, so I take a look at that and where our relationship to the 2-year chart is, right? So I go and I look at this chart, and I've drawn the top of the range and the low of the range, okay, over this last 2 years. And then I keep looking at where are we in relationship to, sort of uh, changing this trend. Okay. So, you blow this up a little more, you start drawing a trend line, on the upside. Okay. And when I was drawing these trend lines, when we got this close underneath this trend line, and we didn't take out the 50 here. So yesterday, I was like, you know what? This market's going to go back down, and I think it's going to test the 1881 area. So, everybody's out there talking about, head and shoulders and so on, and that all the technicians, and they could be right. We're all looking at the same thing, right? So, I start with the day, and then I go to a chart like this and go, all right, where am I in relationship to value? What was the Globex high? What's Globex low? And yesterday we rallied. If you take 25.75 and you take that as the low because it was the Globex low, and then 28 was the opening, and you use both numbers and draw a rotation from there, right? So you draw a rotation 900 points, and I think the high on the opening was somewhere around 35 half to 36 half yesterday. And so that to me, there was almost a 900 point if you use 28 as a low. There was definitely a 900 points if you use the Globex low, right? But I was also, in a market that was down 3,000 points. So I'm like, okay, what's it going to take for me to turn my, to not look at what was going on as far as where we're starting from. So once we got that first rotation and failed, and then I watched for our CCI and the MACD to cross to go from red to green. You could have entered a short yesterday at 28 half to 26. And then once we took out the Globex low, we hit all our targets. Now, the only target we didn't hit during the day trading session was the 1909.75, but we did make that post close. So the key is now, you have to be able to wait for the trade to come to you, right? And wait for indications of failure. So, when you see this, right, we're in green, 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 green. Are you going to sell into that? Are you going to sell into it? Right. So you kind of got to wait for failure, right? And now when I look at this and I take a look at where we are in relationship to the profile, I hope I can find it again. ZBGC. No, it's yeah, I probably erased it, huh?
What'd you raise?
The profile.
Open up the Ninja Trader icon. You want your ES chart.
Right here?
At the bottom.
Okay. Oh, there it is. I'm sorry. All right, there it is, right? So now I'm looking at the profile, okay? And I'm going, all right. So the market's gone from here, 41.75, which could have closed the gap up there from the gap opening. All right. And it made a low yesterday. So we got a 3,100 point range basically from, top to bottom. And when I look at where we're at right now, we're sitting in the middle. Okay. We're sitting in the middle. So now we're, back to the 32 area. Okay. So to me, this is a flip of the coin. I got unfinished on top, unfinished on the bottom. And there's no economic data out there. So I'm just going to wait, and I'm going to wait to see what kind of movement we have off the opening. And then I'm going to look for some sort of failure when it comes to failure or continuation, right? So when you go back, and this is why we draw things like this, right? So I can picture now we're back above value, right? So, and one of the keys that we've always talked about is that you have to take out a Globex high or low. And if you don't take out a Globex high or low, and it has to be out significantly. So yesterday on the opening, we had a low of 28, didn't take out the 25.75, and it rallied 900 points from the Globex low. All right. So if you would have came in here and said the market's 3,000 points, I'm jumping on this, you'd had to sit through all that steam, right? instead of waiting for the MACD and our CCI to change, then looking at your internals when the stock market opens up, like the breadth and the tick and those things, which you will get in our trading manual, then you will then have a better probability of putting more profitable trades on when you're not sitting through a lot of pain. That's the simple, long answer. Any more questions?
IB range, first 30 minutes or hour?
First hour, B and C.
That's it.
Okay. All right. Stay with us. I'll do a live trading thing, I think, next week. We're working really hard on doing getting a lot of these things out, and and working on the new website. So every time we think we've got it done, we want to add something else so that you can benefit from it. So have a good day trading. We'll talk to you. Whoops. Let me stop sharing screens. So have a good day trading today, and stay with us on Twitter. And like I said, we'll identify. I mean, yesterday when we took out that Globex low after we failed up there, we started calling the market going down. So stay with us. I'm not shy, and when I'm wrong, I'll tell you I'm wrong. So good luck and have a good day.